What's the swing between captive and independent? And then also, what is that same swing when it comes to closing ratios?
If you're established, we're able to do it as a captive agency, then the only difference is really just the appointment process.
If a captive agent was listening to this and they wanted to go independent, what would you advise them?
If you don't have any experience with that and you literally have to just start off with like, okay, now I let go of this captive appointment and then I start with one carrier day one, then that would be a much longer learning curve.
A 25 policy agent for you now as an independent, how many policies would they have been writing?
Man, probably half of that. How would people respond if I'm calling, because we do outbound calls too, like, hey, we're calling from Kitajima Insurance, like people are going to be like, no, I signed a lease for $20,000 a month.
Did you say $20,000 rent?
How big was the total book around?
17 million.
Wow. Dan did something that I think a lot of captive agents wish that they would do.
All right, guys. Yeah, the craziest thing that ever happened to my insurance agency, at the end of 2023, I signed a lease for $20,000 a month, office space. And that whole year I've been planning on that expansion. Designing the space, getting the cubicles in, just making sure everything was ready. I was thinking huge, And then the week before I was going to get the new keys, I have a meeting with the reps from the previous captive carrier I was working with. And they told me that we're just going to non-renew, $6 million worth of your book. And in a span of 6 months, because these are 6 months policies. So right when I moved in, that same month, we had 800 non-renewals per month.
Oh.
So yeah, my name is Dan Kitajima, and I am an insurance dude.
Boom.
Boom. There's a lot to unpack there.
A lot to unpack.
Well, I'm going to start with some easy stuff. Or you go.
Yes, I'm really excited about this episode. And I think a lot of our listeners will be too, especially the captives out there. We have a lot of captive listeners that have gone through some similar experiences like Dan has, probably not as gnarly, I would say, right? Like that's a gnarly, maybe some of us in California, But Dan did something that I think a lot of captive agents wish that they would do, or have thought about, or have dreamed about maybe, or just have said in groups, but Dan went for it. And so stick around because this episode is going to get incredible. And we're so excited to have you on the show, Dan.
No, thanks for having me back, guys. We've done this a few times, and I've always loved working with you guys. So it's always great to be back and hang out with you guys again.
Yeah,
love it. You go, Craig.
I got so excited I didn't even let Jason go into the intro. I mean, geez. Unless it was cut, then disregard what I just said. Hey, Dan, the first thing, I mean, it's just low hanging, and just in case anybody didn't hear that,
easy there.
You Craig. Sorry about that. I can't say low hanging anymore. Did you say $20,000 rent?
Yeah. I was thinking huge, and I still have the space here, signed, 7-year lease. And we doubled the size basically of our office.
Because you were going to go big.
Yep.
So you were at this point where you're going to go all in. You're like, that's it. I'm ready to blow it up. I'm going to go nuts. And then you have the meeting. That was like the gut punch.
Yeah. I mean, things were going pretty good at that time. 2022, 2023, right off COVID, we were selling policies and we were breaking records. And I was just thinking great, but you just never know what the Department of Insurance has in mind, and also what the carrier has in mind, what they're going. Well, I kind of, looking back at it, I should have saw the signs, but I was just optimistic, and that's still me. I still think positive. That's kind of what entrepreneurs we kind of do. Sometimes get a little too optimistic to a point of delusion, and but that's a lesson I learned. But that was the situation I found myself in.
How big was the total book around?
17 million. So it was about a third of it.
17. Wow.
So
That's
you have
incredible. Take us through that. Like I want to kind of like what are you thinking? What are the different plans that you have at that moment? Like what's going through your head?
Well, yeah, I worked hard for those clients. I almost feel like, we paid a lot of commission for those clients. So I bought a lot of leads for those clients to obtain those clients. So part of me is thinking like, hey, I almost feel like there's an obligation for me to like, hey, like you guys trusted us to get your insurance. I don't want to just drop them, right? Not be
Right.
there for them.
Right.
So part of like, I felt like obligation to like be there for my clients. And the thing that worked out, which I appreciate, and I know this is different for all captive carriers, is that mine lets us get appointed with other carriers if it doesn't qualify with the main carrier. So that actually opened up the door for me to be in this position that I am now. Because prior to then, and a lot of agents do this with commercial policies, but we're mostly a personalized agency. So at that point, I said, hey, I got to start finding carriers for this agency. I mean, that's what the carrier actually told me to do. Like, hey, they even gave me some contacts that said, hey, contact this carrier. Most of this was non-standard stuff. So like, hey, contact this carrier, and then you could get appointed with them, and then you could start rolling these carriers to these carriers. And that's when I really got the first taste of like getting appointments by myself, charging broker fees. It was just, everything was brand new to me. But that experience made me learn that side of the business while I was still had my appointment with the main captive carrier.
So was your intention to go sort of hybrid where you were going to have those relationships that they recommended or said that, you could go have, which seems like a really good idea. I mean, it just seems like a good idea for a carrier that's going to stop letting a person sell products to then replace it. Seems like a good idea for
and potentially
clients.
come back too. When the timing is right. So it wasn't really my intention. Like I just loved the captive carrier I was with at that time, and I had a good enough closing ratio. It had preferred standard, non-standard products there. So I felt like everything was fine. Like the compensation was great. So it wasn't really my intention to like be where I'm at here. It just kind of like I was forced into it. Like I had to force getting into these carriers because my thought process was always like, okay, what can I do for my customers, and what can I do for my producers too? So I never really thought I'll become an independent agency because everything was just so fine. But then once I started learning a little bit more, again, I felt it was just kind of like, it's funny how life works. You're kind of like just things are just happens like without just by not with intention, but just through like circumstances.
What were you able to save? Like how many clients?
Most of it, we had a pretty good CRM system, that I designed, with communication going out based on non-renewal dates. And these other carriers, even though California was going through a difficult time at that time, some of these non-standard companies, they actually wanted to write. And that's one thing that I learned too. Like, hey, like every insurance company is different, Some may be in a situation where they're like, just don't want anything and actually want to reduce risk in this state. And some carriers, like, new ones are like, look at that as an opportunity and be like, hey, this is our time to grow. This is the time we can get aggressive. This is the time for us to like have actual incentives. I was like, wow, this is so different how each carrier is so different within the same market here. So these non-standard carriers, they're appointing me. They were like, thankful for the business we're bringing in and, giving out other incentives that I've just learned about. And, thankfully, due to the appointments really saved us, so out of all, I would say not all of them, but 75%. I wish I had the data on that, but my intuition is probably like 60, 80%. We had a good relationship with our customers, and we told them, hey, we're going to non-renew, but we already have this ready for you. It wasn't that we were able to retain,
help them not have to make the decision.
Yeah.
Right.
Mm-hmm.
Yep. Here you go. There's bad news, but we have great news because we can put you over here.
Yep.
And I think, so then you started seeing, oh, wait, this isn't much different, and I have this stuff over here, but I could just make all of it. Is that what it was? It was just like, well, this seems like just an easier path to manage if I have it all here. Or did you see that you couldn't, like, doing the shifting the business over to the other to the independent side or the channels that you had there, that it just wasn't going to make up for the loss unless you were able to commit all the way? What was the defining decision?
Well, it wasn't easier because there's a lot of guidelines with each carrier, to learn, and different like systems to go to, and learning the rater, and then underwriting guidelines. It's not all in like one place, So
Right.
it's a lot of learning curve there. I think I think the deciding factor is because if I'm still with a captive carrier, I still have to go through them first. And if they decline
Uh,
or non-renew, then I can write with the other carriers.
uh-huh.
So if I let go of the captive carrier appointment, then I could just write with all the carriers I have due to pricing, not
Right.
due to eligibility. So it worked well with having the captive as a preferred carrier and all the other ones as non-standard. But if
Yeah.
I wanted to kind of get into the standard and preferred market for the independent, then I couldn't have that captive carrier relationship because I would have to
Uh,
honor that contract, like having to go through them first. And now once
mhm.
that captive carrier started wanting to write more business and or accepting more businesses, then my independent side I wouldn't be able to offer. But it was weird because in my back of my mind I was like, well, this carrier actually is a better fit for them price wise. And when it comes to insurance, price matters for our customers.
Right.
And I felt like, um, again, thinking about the customer first, I was like, hey, as an agency, we'll actually be doing more of a service to our customers. If I could just say like, hey, this is the best price we could give you, not because hey, you have to get this one first, and if you don't get it, then I can't help you. So
Yeah.
I did a little bit of the math, and I think it's just closing ratio. That was a big decision factor, and then also frankly you know revenue commission plans and broker fees and things like that. And I saw it side to side, and even though it really hurt me to let go of that book of business I've built for 17 years, I said, hey, it's like I'm not getting younger, so it's like if I were to do it, it's just now's the time, because I felt like I was kind of like half pregnant. I was kind of like, all the time I was like thinking like, what I'm gonna do, So I just said, hey, I just have to go to court here. But I felt like I was ready, and I'm really grateful for the experience there that I had with that captive care, because I didn't know how to be a business owner when I first started. Like I kind of needed
Right.
that
Mm.
brand's backing. I felt like I just I couldn't really stand on my own when I first started. But 17 years later, you kind of like know the game, like marketing game, and it taught me
Yeah.
so much how to hire people, and like, okay, now I could like, I feel like a grateful like kid, like, and they're the parent, like they raised me to the point where I truly feel like I'm like, okay, I'm really on my own now, but they helped
Mm.
me get to this point, like I'm like a teenager that's about to move out of my parents' house.
I love it. That's such a good analogy. I have a couple questions on what you just said. So I would like to. What are we talking with the broker fees too? What were the determining factors? Like, what's the swing between captive and independent, and then also, what is that same swing when it comes to closing ratios?
Yeah, well, the swing is huge. Where I mean, first of all, we don't charge broker fees as captive agents. Okay, so a lot of times when we're not selling policies ourselves, we're having producers sell it for you. Then a lot of the revenue, or the profit, I should say, comes from renewals. You know, uh, Afterwards, it's just a long-term investment. Like you purchase a lead, you purchase, you pay your producers. You're not really making that much money upfront.
Right.
Now, if you could charge a $200 broker fee when you first sell a policy, then the cash flow problem really, really, really gets a lot better. And you don't have to wait for the first on that. That's like straight to your bank account. You just boom, it's just like right there. As you charge it. So that was an eye opener. I was like, wow, this revenue stream is something that I never really understood, because I've never been I didn't know how it even worked. And then before we get into the closing ratio, Jason, yeah, just comp plan by itself, like the percentages, you know, because we're at the captive, carrier. There was a lot of variable comp. It was, and it really made a big
Right.
difference. And also, we had to really focus on other lines of business we weren't that strong at, and it just was like we were
Yeah.
always thinking like, man, we got to write like this and that, and it's like it didn't really help. I kind of like to be a one trick pony, like do something and do repeatedly and just scale that,
Yeah.
and it
100%.
and it was, we had to go out and write some policies that we weren't comfortable with, and it just kind of like slow down, like, because each product requires like its own marketing campaign to me. And then we would just try to cross sell and we would get by and we hit those numbers. But then the renewal comps started really getting confusing and it really would sway. So not so much on the new business side, because the new business side, they have some nice comp with bonuses and stuff like that. But on the renewal service side commission, it's nice to have like a stable, like, set, comp percentage. And closing ratio, yeah, I mean, again, people are pretty price sensitive, and it's like it's no secret. Like the best marketing works where like, hey, we could save you money, So it's like you're kind of leaning
Yeah.
with that, and if you can actually deliver on that, because when you have 10+ carriers, and you could just say, hey, truly, this is the best one, then it helps. I mean, yes, it's nice to have the brand, you know, and I think certain buyers prefer that, and that's great. But I think where I saw where maybe my clientele, was they kind of prefer the savings, it's just kind of
Yeah.
where the market is. Like, people just want.
Does in your opinion, does the branding matter as much as it used to?
I think it depends on your market. Yeah, I think if for the preferred side, yes, people care more about the coverage and they want higher coverage and things like that. And a good reputation when it comes to claims because they have more to protect. Now, if you're in the standard or non-standard side, then not so much, because it's just like, hey, what can I afford? Like, yeah, it'd be nice to have, a company I heard of, but this is my budget right now. And if you can find me something lower, then I actually appreciate that. So I think it really depends on which market you're servicing.
I'm curious on the broker fees. Do you ever get pushback from that, or is it just a hard and fast? Like, I don't know what the rules or what it is with broker fees. So I'm just curious how that all works, because that seems, I mean, that's crazy, right? Like when you all of a sudden inject $200 per policy, I mean, that's a game changer.
Yeah, it really is. And yeah, I mean, I think each broker does it differently. Our agency just has a $150 minimum. Okay, but if you charge more than that, then the producer, there's compensation. So our average is about like 189 or so. But yeah, it's just when the customers, yeah, when they do have pushbacks, then we go down to the minimum 150. But there isn't that like huge of a swing, and I think some brokers have kind of taken advantage of it and gone too crazy with that. But we don't want to, you know, we don't want to get greedy here or take advantage of people. So it's 150
Right.
to 150 to 250. So our producers have some wiggle room, but it's not. That's I give them the freedom there. So if it's like, hey,
Yeah.
it's a big premium. It's like I don't want to. I'm not going to make much off the additional broker fee. If you charge a little extra, it's not like your commission goes crazy. So they'll charge 150. And some agents like just charging 150 all the time. Some agents are a little bit more aggressive with that. If it's a smaller policy, they go bigger. But it's just, and depending on how much money they save. So and they can waive it and they sacrifice the premium comp to a half too. So I give them some flexibility there. But it's really interesting how it is like the wild wild west to me. Like it's just like, wow, like you can just, it's like whatever you feel like doing. So but it's good to have some set compensation, set agency standards, and that way the producers know what they can work with. In fact, if they want to go over 300, then they have to ask me for approval, because I'm like, why? So yeah, but yeah, there's really
I
nothing.
mean, it funds leads. Like that funds leads right there.
It does, and in a way, because we came from a captive agency, we almost felt bad, and we almost used to say we don't as like a selling point before, and now all of a sudden we are. Like our producers were like, wait, like this isn't what we believe in, and I was like, yeah. The way I looked at it is like, well, if they could pay the if they could pay us the broker fees, then in turn we're going to be able to provide better service for them, because we're going to be able to staff our customer service reps, and then we could pick up the phone calls on our first call. If our revenue wasn't good, then we're going to be out of business and we're not going to be able to service them anymore.
100%.
So I that was a huge turning point for us, for me to be like, how do I not get rid of, but like, how do I kind of get rid of the guilt for charging brokers. I was like, hey, this is actually for us to be better as an agency, for us to actually be making money so we can help out our customers in the long run.
Yeah. And I mean, you share it with the reps too,
Yep.
right?
Yep.
I don't, what I've learned over the years is, the guilt of, it's just a weird thing that I think we all have that, in our culture about premium things. Like, people think that prices are set, but they're set by somebody, right? Like, somebody's making up all the prices, and then the values of stuff is all perceived values. And when it comes to luxury items or anything that's premium, it's like, it has to, when you have that kind of revenue, you're able to do things that are premium, and there's a bunch of stuff that comes with that. Yeah, if you're ripping people off, you should feel bad. Right. But like, to your point, if you can hire a staff that's going to pick up the phone, like, that's what you got to do it, right? Like, if you want to have that next level company, you have to do that. And I'm sure there's tons of brokers in California that aren't doing that, that have crappy customer service, that aren't providing any service for their clients. And I think that that's way worse than charging a little bit more and being there for your people. You know?
Same thing with part of you guys' operation too, teledudes. The more revenue you have, you can use that revenue capital into technology and to provide a better service for your clients. So I think without you're doing a disservice not only to yourself but to your clients if you're not making money.
Right.
No one wins on the race to the bottom of prices, right?
And if everybody's penny pinching and you're at this like small margin, there's a lot of stress. There's a lot going back to, when you were at the end of your road with the captive. I'm sure there was that's a lot of stress, because you're starting to get to those numbers where it's like, there's very little margin of error to mess with, and that trickles down from the head, the owner, the leader, all the way down to your team, the way everybody operates. And
you see the difference, like, because we talk to a lot of agents too, and you see the difference in like where, I was in that place of scarcity mentality with the agency where I'm going to wait until I have just a little bit more money, then I'll do, and there was always wait, but it never improved without doing the thing first, right? Like, you're not going to get in a better position. My experience was I never got in a better position by waiting for it to get in a better position for me to then do, the market or then do whatever, right? It was, you had to make that, you just had to go for it.
Yeah. Yeah.
That's the ones that win, right?
Yeah, I remember that. I always thought that, like, hey, next year the renewals will kick in. Next year the renewals will kick in. It's like, it's never as good as you forecasted.
Right.
So how long did it take you to get used to going from the captive model into the independent model? Like mentally, and like just feeling comfortable with your team and everything?
Wow, that's well, the whole process took me about 2 years, where I had access to independent carriers. But yeah, still to the very last moment. So I've only been fully independent for 28 days here. But we're about to have our best month ever here. So I think, as far as new business, policy sold. So once I made the decision, until then it was like I wasn't fully comfortable till like the very last moment, till I was like, hey, I'm gonna do this. But once I didn't have that captive carrier anymore, like I couldn't log in, I was like, I got comfortable pretty quick, because that was right. that was, and with thankful for my team's adaptability. Their buy-in, they were a big part of decision making. they felt like we could do this. They thought it would be better. Um, they thought we would sell more. So I kind of went off there, and looking at the data too. But I wasn't fully comfortable till like I actually did it. But pretty pretty soon I just felt like, wow, I got comfortable pretty quick because hey, we didn't have that carrier anymore, but we were fine, and that I owe a lot of that to my team for their attitude, their adaptability, and their feedback.
If a captive agent was listening to this and they wanted to go independent, what would you advise them on ramp up time and how long it would take for them to be comfortable with the independent side?
Yeah, that's a great question. Now, it kind of depends which captive carrier you're with, because with my situation, I was a little fortunate because I had access to some of these independent carriers already. So that was a game I already learned how to get appointments. What do they want to see? Like what type of production they're expecting, or like what type of rating system do you need to have, or what kind of payment processing system do you need to have? What kind of like forms you need to have signed? So I had way more of a ramp up time. So if you don't have any experience with that and you literally have to just start off with like, okay, now I let go of this captive appointment and then I start with one carrier day one, then that would be a much longer learning curve, I would say, you know. So if that was the situation, but you still hopefully have some revenue coming in from the sale of your captive agency. But, you know, depending on the market too, if it's easy to get appointments, and nowadays it is a lot more than a couple of years ago. So depending on how the market is, what the market is doing, if the other carriers want to write or not. But in general terms, yeah, I would say. But it's also like it's not that different either, So if you're established and if you were able to do it as a captive agency, then the only difference is really just the appointment process. And then there's other clusters and aggregators you could work with as well too in the beginning too. So a lot of different ways to do it. If you go direct, then I think long term it's better. But it might be, if it's harder for you to get appointments directly, then getting access to carriers right away might be better. But maybe the commission split might not be that great. So kind of depends on short term or long term how you want to set things up. But it's not as crazy or totally different, because at the end of the day, once you have somebody on the phone, it's the same product. Same, you can use the same script. It's So if you're really established as a captive, I think I would lean towards being more confident than thinking like, oh my God, it's a totally different game. There are a lot of benefits for the captive side, I could say, and the one thing I'm going to miss the most is the people. Going to the trips, looking at the leaderboard, and then having that camaraderie of like, hey, like, what are you doing in this state? I'm in a different state. Like, let's like, let's talk about what's working for you, and going on trips and then meeting people, same people, and just building those relationships. I do feel like maybe on the independent side, there's a little bit of sense of like, hey, like you're kind of on your own. There's no like, other agents that you like train with. So, but I think if you already have a base of like knowing what to do, what works in this business, then, and who knows, hopefully I'll be able to, and I'm starting to, network and get to know independent agents. And I think thanks to social media and things that gets us, connect with more people, I think that downside of being an independent where you don't know anybody and you're kind of on your own, I think isn't that much of a factor as I thought it may be.
It's some good organizations. IAOA.
You think about ISAOA, like you have to put ATIMA.
Oh, you ate one too.
Too many accord forms we filled out.
8675309. Yeah. So, man.
What is your, just curious, what is your break even with your marketing that you're spending now per agent? Where is your break even point with policies with your acquisition costs? Are you breaking even on the initial policy?
Depends on how many policies that agent sells. because they get the base pay, right? So if they're selling
Yeah.
like 25 policies per month, then they're profitable for me from the first policy.
From month one.
From month one, yeah. Whenever you have a producer that's getting the same base pay but they're not selling that much, that's when it really kills the profitability of the agency.
Yeah.
Yeah.
Do you have all of your agents in house, right?
Yeah. Yeah.
What is the ramp up time to get to 25 policies?
Right now, like we've been very fortunate being able to hire people with experience, with license and stuff like that. So if they already have a license they've sold before elsewhere, then they should be doing that in their second full month.
So you're only losing out on a little bit.
Yeah.
So a 25 policy agent for you now in your current as an independent, how many policies would they have been writing when you were captive?
Man, probably half of that.
Half?
Yeah.
And you didn't get broker fees.
And you didn't get broker fees. And we would probably be kind of like leaning towards like, hey, do you know any friends or family that need life insurance? So we don't have to do that anymore. We're gonna hire
That's my favorite part.
We're gonna hire people just to get like their referrals for life insurance. It's almost like a MLM.
And the last question of your interview, how much life insurance do you have?
It's that piece of it to me for captives is so bananas crazy, because you're asking someone that specializes in one thing to do something totally in left field. Like why not just let the people be good at one thing and then hire for that other and then place them together and expect have a certain expectation for each side.
Yeah, I think I have a theory of that. I think when the captive agency's model first started, it was kind of like, hey, you become an insurance agent and you sell your neighbors and people like people you go to, you went to school with or people you go to church with, and you sell them the whole, the whole product line. Now I feel like, okay, if you want me to sell like a life insurance policy, then I'm competing with somebody that only sells life insurance for 20 years, that has 20 different carriers, So it's like, it's so much tough with the information age that people could specialize that, like, I just felt like I was out of my league when it came to like selling real life insurance policies, because that wasn't my background and my competitors are. So yeah, you're absolutely right, Jason. I feel like as an operation, it's just so much easier to just scale when you're really hyper focused on one product, one target market, and
so much easier.
Do one thing really well, right?
Yeah.
And the life cycle time of the sale, you're talking, follow-ups, everything for an auto policy. A full cycle of follow-ups is about a month, right? Like max. But like for life insurance, dude, it could be 3 months to get them, 6 months to get them to buy, and then you're looking at 3 months to have the darn policy issued. It's like, mentally, how can a sales agent that's doing all these quicker sales still have attachment to those like those policies that are that far out? It's like, it doesn't make sense. It's a bad flow to have both together.
It's very difficult to be good at both. I mean, I and to me, what was tricky was it's such a harder sell, but the comp wasn't, like, long term, the comp wasn't that great. And you only get it for the first year. And then it's like, okay, now I have to motivate my staff to sell the life. So I have to kind of pay for that, because how much impacts the renewal commission. So it was almost like a problem I tried to solve with money, and I just had to like overspend to get that one policy. And it really kind of like, it slowed us down, but I mean, there's captive agents that does a great job of that, but that's really a highly skilled individual, and those producers are very hard to find. It's a lot easier when 100%. You find a producer. It's like, hey, just we have just one product, we have one script, and just do this over and over again.
I mean, with the right system, you could almost put anybody in as a PNC sales agent, right? Like if you give them the leads, if you provide the environment, most people, if they care and they want to do well, they're going to be able to do it. life is it's so skilled.
Now you got to get another
Yeah.
license too. So it's like, hey,
Yeah.
welcome to our agency. I know you could kill it here, but now I need you to get this license, and then I want you to like start selling to your friends and family this product. And it's like they're learning that, and then they have to learn the new system to sell what their bread and butter is. Yeah, and then now you're becoming more dependent on your top producers who could do both.
I just think like life insurance is a financial product that you need somebody that has a strong money mindset, right? Like I feel like I could sell life insurance to anybody now because I believe in it. I have it. I can see how to like make a ton of money for myself investing in it and how to, you know what I mean? So like for me, I could do that. But like you're talking about somebody who doesn't have life insurance, doesn't have a financial background, probably has some money mindset issues. You know what I mean? So it's like to get them to advise somebody else on their finances, it's like, who's going to listen to them? And you know what? That's probably what they're thinking too. And they're right. Like when you have a life insurance guy that's probably has a bunch of other products too, investment in the stock market and all that other stuff, you have somebody that's like more like a financial advisor that is a master at their craft. They're investing in this stuff. They're doing what they're selling. That guy's going to crush your sales agents every time because I mean, it's like you can't trust a plumber that doesn't have any pipes in his house. You can't trust an electrician that's, you know what I mean? They're not doing the thing that they're selling.
Yeah, it's almost like two different sports too. You know, so it's
Right.
like it's hard to be world class at both. And if you're competing against another person that's only does that sport and they're pro at that sport, then yeah, pretty good chance we're gonna get dominated.
But I like it when the two people, get the two masters at their craft together,
Right.
working together, and then the client has the masters at two crafts.
Yeah.
Like that's what I would want as a client.
Yep. And that's what the great captive agencies that are able to produce different lines of products. They probably have they do have specialists in each line.
Got to specialize.
So I have so much respect for agency owners who could do that. I struggled with that.
Yeah.
I've met life insurance, at different things or whatever, different conferences and such. And you meet life insurance guys. They're like, "Oh, you're at P&C. Tell me about that. I really want to get into that." And it's like, if you're good at what you do, I would just stick with with that, because that's so much more lucrative once it's set up and there's processes. I mean, man, they can crush it, right? Versus like, don't try to open this thing up over here.
Yeah.
I mean, partner with somebody, right? Like that. I think that's the best synergy is just partner where you have both things, right?
Yeah.
Offer the solution.
Yeah, because we all know running a P&C agent is like, it's not easy.
Different animal.
Yeah.
Can I ask you some numbers as far as your marketing goes?
Yeah, sure.
Wait. No, go ahead.
As far as because I know you're back to a smaller agency. I know it's big, but it's smaller than what you had. But so you're probably watching the numbers pretty well. What is your what is your thought process when it comes to how much you're spending on marketing per agent, and then like the break even point? Like how are you approaching that whole area now?
Yeah, right now it's kind of fun because we're more focused on sales now, because once you have, it was fun in the beginning parts of growing a captive agency too, and it's the customer service and retaining a bigger book of business is really where the money's at. But yeah, it's right now we're very sales focused. The lead cost is very affordable right now. I would say that I'm only spending about $1,300 per agent right now, which is like the lowest it's ever been. My lead sources are Google and Facebook, so I've dug really deep into that, going direct. The challenge for me right now is more so availability of agents. So the fear I have is like, okay, when customers call us or they fill out a form, we're not getting back to them right away. Then it's like I'm overspending on leads. I want to spend more on leads right now, or marketing, I should say. But the challenge is I just don't have the availability, especially on like later shifts with this business. We get a lot more call-ins and people requesting for quotes, and people wanting to set appointments like after 5 p.m. and Saturdays and things like that. So availability is something I'm really looking into. So when I recruit for people, I'm thinking, or at least maybe quote intakers. That's kind of like where I'm at right now. Is like, how do I find agents that are willing to work weekends, willing to work later shifts? And if I could do that, then I want to spend more on leads. Like it's actually there's I don't know if there's just more shoppers, because the disruption in the market, the rate increases, the minimum, liability limits going up and stuff like that. There's just a lot of shopping going around right now.
Yeah.
So my background, or like what I really like to do, is marketing. So
100%.
I think if that problem is kind of solved, then the biggest constraint is actually producers and availability to handle the lead volume.
Yeah, it's funny when there is disruption and when there are rate increases. Most agents, when I'm looking at the chatter, are complaining. But I'm thinking to myself, I mean, I know just from our agency, is it's almost like the sand at the bottom of the beach. You know how when you walk out to the water, it kicks it up and it like causes the smoke of sand in the water, and it gets cloudy. It's because everything's finally moving.
Yep.
Like all the people are looking for new stuff. So if you are a sales centric business, you have a million swings at the bat, right? Whereas in a market that that doesn't have disruption, it's like sand that's already on the ground. It's hard to get those pieces because they're solidified. Nobody wants to deal with insurance unless they have to, unless there's some sort of pain. So the pain of the market changing is a benefit for those who want to have a sales first organization.
Yeah, absolutely. Right. I think same thing with staffing too. Like, if it's the market's like stable and everything is fine and, retention is good and the agency owners, then a lot of times, producers they're pretty happy where they're at, but when these carriers are going through comp changes and all this stuff, that's when like actual like A players actually may look for jobs, which sometimes they don't, only once every 10 years. So when there's disruptions, I think it is an opportunity for those that are active and not scared to take action and to build a foundation when things get better, to be in a much better situation than when people are like, okay, now the market's better, now let's start. No, like now, you're already 10 steps behind.
100%.
It's like waiting for it to get better before you pull the trigger.
What's that?
It's like waiting for it to get better before you pull the trigger.
Yeah.
You just wait, and then next month it's time to do it.
Yeah. Getting started. Well, never stopping is kind of like, I guess, the way to go. But yeah, I think it's an exciting time right now, especially with new technology and stuff like that. But it's it is exciting time. And that's awesome, Jason, that you really want to get into the numbers stuff. That's something that I think agency owners really need to look at. At what point do you break even? It was a couple tough years for us in California here.
Yeah.
So I'm finally happy to be kind of turned that corner, and that's one of the things that I would say too. And I just don't want to steer anybody to, so much, because there's so many pros and cons for both sides. But I will say with the independent side that, hey, if this carrier says we don't want to write full coverage cars in LA, all right, fine. We got another carrier that will want to. Or if another carrier says like, hey, these cars, we don't want to take that risk in this area, or these type of cars, or these limits, it's like, no problem. I felt very helpless to the carrier's financial situation and their appetite.
100%.
And that's where I feel a little bit more actually secure going into the future, because I'm like, okay, with this one carrier, and we already had this experience with where with one carrier would just completely just drop out. I had it happen again where it's just like no more new business. It's like, all right, gotcha. No worries. We just keep it moving with the other carriers that show up on the radar. So I feel, even though it seems risky, it's funny how I feel. I have less risk now.
I agree. I mean, this whole thing that happened in California made me really understand what the relationship is with the agent. So like with the captive agency, your relationship as an agency is to the carrier. It's not to your clients. Your clients, if your carrier decides to screw them, they're screwed. Like you can't help them. You're not actually in a position where you're working on your client's behalf. Where if you have an independent agency, who cares about the carriers? There's so many. Like you can sign with the new carrier tomorrow. There can be a new carrier that comes out that's better for your clients that you can sign and then switch them over without any kind of like, hey, you're fired or we're stealing your book or anything like that, right? So then you become the fiduciary of your actual clients, right? Like you become, your allegiance is to your clients, not to the carrier, which is a relationship when you're in a situation like we were in that makes you feel better because you can do the right thing for your clients. There was nothing that made me feel worse. And honestly, I obviously have some strong feelings about it, but for a carrier to tell me that all of your clients are screwed, and by the way, you have to talk to them and then tell them that they're screwed and then not be able to help them, is a crappy position to put an agent in. It's a crappy position to put your clients in. You're spot on when it comes to that. Talk about more peace of mind, a better relationship for you as an agency owner. I would say that,
seems like a way healthier way to go.
I feel like we're on the edge here of Jason making a decision here. No, but
well, no. I mean, also, I'm, I am in the situation that I'm in, and I feel blessed, like you said, that you feel blessed for being with the carrier. I feel blessed for having the experience and everything that we've gone through. So I guess my mind is like on both sides, right? Like I feel very grateful, thankful for everything. That if I started over again, it would be I would probably choose a different story. But then again, I don't know, because it went so well at the beginning. So, and I learned a lot. So I mean, I don't think that there's a right and wrong necessarily.
There really isn't. And it's just really just based on each agent's, preference. I think I think the biggest fear I had was like, well, if no one knows Kitajima, like no one knows, but the captive agents, the name branding helps everybody. So it's like, how would people respond if I'm calling, because we do outbound calls too, like, hey, we're calling from Kitajima Insurance, like people are going to be like, no, but it hasn't seemed to make that big of an impact as I thought it would. So far, so good, but I'm just getting started and I still have a lot to learn. Another thing I would add to you, just another thing that I thought was really interesting is that the marketing reps from these carriers, they know you have choices. So the way they kind of communicate, and the captive side, the executives there had great relationships with, I have so much respect for them. But in general, it just seems like they are kind of like, they want you to write their business, and I feel a little bit more of a sense of gratitude when I do. Rather than like, fear of something might happening if I don't do this or that.
Yeah.
So they almost know like they're in competition with, other carriers that are independent. And I'll throw a wild one out there too. This is a wild thought I had. And I think in a way some captive carriers do this, is like if they let agents go independent, I feel like they'll get more what they want.
110%. I've thought about that a lot.
Right? Because sometimes if it's a captive carrier, you're kind of putting things in if it isn't the right fit, because that's just, And even if it's like a crazy price, people will be like, okay, fine, I'll do it. And it's actually risk that they actually don't want. And if they let independent agents write, and I think in some states they already are doing that. It's crazy how like you're a captive agent, and you can't sell with other carriers, but an independent can sell your carriers and other carriers.
And get paid more.
Yeah, but that model, then it's kind of like, well, you're gonna get an independent agent that has a high close ratio, who could again have more higher revenue, so they could pay more for leads and hire more staff and actually market more, and the captive carrier will now only get business that they really want from these agents. So I mean, obviously we're not going to be convincing anybody to make these type of decisions, but I was thinking like, what if the captive agents just let independent agents write them? Then they'll actually have more agents representing them too. They wouldn't have this like recruiting problem. I'm not sure if they even have or not, if they want to have more agents or not, but I don't know. I just feel I don't know. I just maybe believe in just free market and just, free economy, and
100%.
And then just being able to, as you were kind of mentioning, Jason, like a natural intuition of a business owner is like, what can I do for my clients? And I feel like that's very important for us to know that, like, hey, what we're doing is, for our customers.
I think it's goodwill that it's the goodwill, right? Like, then the client can stay with the agency that they want to stay with, and then when they are in a better situation, they can be with a better carrier, or if they're in a tight situation, they can still stay with the agency and get that care, and it's like, with the CAC going up, especially in California, it's like it's hard to keep spending money to acquire a customer when it costs more and more, and we can't place more and more. That's the reason why the cost is going up, is because we can't, like, the appetite has gotten so narrow that it's like there's so many, we could help so many people, but we can't because we can't. Like, there's nowhere to put them.
Yeah, that's where the closing ratio makes a huge difference.
Yeah,
in the numbers.
Appetite and closing.
Yeah.
Well, Dan, I don't want to keep you forever, but this is an awesome conversation. I would love to check in with you throughout the year, and just, I know this is the very beginning of this, and I think it's a cool, gosh, I wouldn't say a cool story because you've gone through a lot, but like, I mean, it's a heck of a story, and to watch you say, you know what, I'm going to go for this 100%, be able to take your team and everything that you're doing is so cool in that sense, where it's awesome to watch. I've been watching you on Facebook, and I was like, oh man, we got to get him on the podcast, because I'm so curious of, you're going for it. You have that drive, that entrepreneurial drive, and you're willing to take chances, and you're going for it. And I know you're going to have success. So it's awesome, man.
Thank you, Jason. Yeah.
And he has a shoe for every situation.
That's right. And I think that spirit, I see it in you guys too. I think a lot of times I see that with captive agents, because, if you're limited to certain things, then you kind of think of outside things you could do, and, teledudes, stuff like that, where you have full control of what you can do. I've seen so many agents do well with like different businesses, and that's something that you guys are doing, and that's awesome that you guys provide that service for other agents, and help out other agents, because that way you kind of have a little bit more creative freedom. So that's something I've always kind of wanted to do, and that's kind of why I started making content too. Like, hey, I want to offer some type of service to my agents, but again, I've been learning more about myself, that I'm just like to do one thing. So much props to you guys for having that service out for the agents.
Oh, thanks, man.
Thanks, man. So good to have you.
Well, yeah, this is awesome, man. Super stoked to be able to talk to you about this.
Yeah, we'll definitely keep in touch, and then you guys have to be on my show too one day. Like we talked about.
100%.
For sure. Yeah.
Yes. And so, but before we take off, let everybody know your podcast and everything that you're doing if they want to get a hold of you?
Oh yeah, sure. It's Dan Kitajima. So that's on YouTube, Facebook, Instagram. Those are the three main platforms. So yeah, if you want to reach out to me, especially if you're an independent agent. No, I'm just kidding. Just anybody that wants to connect. I love just keep in touch and sharing stories of how we could win together in the insurance business.
Awesome.
Awesome.
Thanks so much, Dan.
All right, guys.
Thanks, Dan.
Great seeing you guys. We'll see ya.